Hello, this is Alan Kendall, and I thought I'd say which oil company would Warren Buffett buy in August 2009. And if we look at these companies, we see that ExxonMobil, Chevron Texaco, ConocoPhillips, Marathon Oil Corp, Petróleo Brasileiro, Suncorp, BP, and Hess, we see that if we take using the value formula where we take the net profit for the last 12 months and we add the percent dividend to get the return, and we divide it by the price to book to get an idea of the price. We get an idea of price of value to price, and scores more than 10. Warren typically buys companies that have good earnings on price dips. This score ratios come up to 10. When we do all the ratios, none of these come up more than 10. So Warren would not buy any of these companies in August of 2009. It's very interesting that Marathon Oil Corp is only selling for 6% more than its price to book. That would attract, that low price to book might attract Warren, but just in March these were selling many of these were selling at 90%. Like ConocoPhillips was selling around 90% the price to book. I think it was 0.93, and so it's jumped since then about 30%, and the earnings on many of these companies have fallen because the price of oil has come down with the recession. So in August 2009, the strongest ones are Chevron Texaco, which has a good net still, and they're selling for a relatively low price to book. And Marathon Oil Corp has a low price to book and comes out with a score of 7. Chevron Texaco has a 7.8. Marathon Oil Corp is a 7, and BP has a whopping 6.74 dividend. If that's correct, this score comes out to 7, and the price to book of 1.62 is relatively low. Hess has a pretty relatively low price to book too, but their score only comes out to 2 because of the low return at this time. So Warren probably wouldn't buy any of these companies in August 2009, but the strongest ones, if these key ratios are correct, are Chevron Texaco, Marathon Oil Corp, and BP. I hope this has been helpful. Have a nice day. Bye-bye.